How to navigate today's market turbulence and how to get the fundamentals right is a topic that's on everyone's mind. Unfortunate for us, today we're joined by a full panel to help offer a 360-degree view and to help us moderate the conversation so that we can really drill down and get to the bottom of their individual investment strategies. I'd now like to invite ET Now News Editor Markets, Ms. Ayesha Faridi.
Okay, so we are trying to figure out how to deal with the current market volatility and how to best make use of the Birla Sun Life Mutual Fund family. So Ajay, there were 6 things to cheer about. Yeah. The 3 C's were taken care of. That's China, crude, as well as currency. And you had IIP in your favor. You had inflation, which had softened. And then, of course, the Met Department, I hope they come correct. The monsoons as well were taken care of. Does it give you a good feeling that at least these 6 factors, which we were so worried about at the year end, are at least somewhere stable?
Yeah, so Aisha, all these 6 factors, which were areas of concern till last year's, till March, things are seeing an improvement on all the 6 factors. And probably crude is good because we are seeing we are not seeing outflows rather than we are seeing inflows because oil producers now are not withdrawing money.
Kaustubh, I want to first talk about the environment right now. We've got a call in equities. But is the currency stability here to stay? Or do you think this is just an interim and we could get back to those ghastly 70 sort of levels to the dollar?
Yeah. The thing is that currency is a channel through which we interact with the world. And it's widely dependent on how broad macro fundamental is. Given the way where our current account deficit is, given the way the government is committed to the fiscal deficit, which in turn should lead to lower inflation numbers, and the kind of growth that India is witnessing, probably the highest growth in the top 10 countries by the size. Even yesterday, IMF, he brought down the global forecast for 2016 to 3.2% for the global growth, but the Indian growth forecast was capped at 7.5%. So it's a kind of a Goldilocks kind of situation where the growth is decent, the fundamentals are prudent. So I don't see there is any reason why the currency will be a sell-off.
Jayesh, as a fund manager, how difficult is your job getting?
The job of picking stock remains as difficult as it ever was. What is currently missing in the entire picture is the earnings. And as a fund manager, our research team is focused on identifying those companies which will deliver 3 to 5%, earning growth over a period of 3 to 5 years, superior than the market, better than what is estimated by the analyst. So we not only have to have better earnings growth, but we have to have growth which is not currently discounted in the price. And that remains a very, very challenging job, especially in this environment where growth is very elusive. It is not across the board. There are very few sectors in the economy which are really doing well. And of course, you have macro, variables which are changing all the time.
Just the point that he was just making, Jayesh, that earnings still are a very big question mark. Do you think the anemic earnings, which we may still see in the quarter ahead, are already in the price? I mean, when you guys look at earnings, are you already jumping up 2 quarters ahead?
We have to focus on the longer term, try to identify companies who have the earning power and are expected to earn. There are quite a lot of companies, despite the anemic earnings over the past few quarters, have shown high growth. So our job as fund manager is to identify those companies and bet on those quality companies and management. I think that's what we're going to do.
Ajay, just coming back to you, as a fund manager, do you look at global parameters right now and get a little cautious in your approach? Or do you just look at the very micro fundamentals of each and every sector? What's the tactical strategy?
So for Aisha, for me as a fund manager, a stressed environment is good for me, my set of companies. So I believe in a philosophy that if someone can sail through difficult times, they will say do very well and when
Good
times are
times.
good. Times are good. So probably this environment will throw up a lot of good companies, and the companies that can survive these difficult periods will be doing very, very well.
But Jayesh, what is the flavor of the overweight and underweight positions in your fund right now?
We are overweight on 6, 7 key themes that we are running in the fund. So, for example, private sector banks, NBFCs is one area, particularly housing finance NBFCs or NBFCs lending to the low strata of the population, the microfinance NBFCs, etc., are sector that we are overweight on. Then we are overweight on gas, oil and gas as a theme. Significant overweight we have that. We like construction as a sector, which we think, particularly those companies who are investing or are in business of constructing roads or railways, those will benefit big time, and we've invested a substantial part of our portfolio in that. We like mid-cap IT. Mid-cap IT, I think, is at a very reasonable valuation with good ROE and good earnings pickup. That is another theme that we are running. We like consumer discretionary a lot, and we are playing that with a 4 or 5 set of key stocks, each with significant weight, to address the growing urban the pickup in consumer spending, particularly discretionary spending, and so on and so forth. So for us, we select 7 to 8 themes, and then in the mid-cap portfolio, we pile on to those themes with individual bottom-up stock picking in those sectors.
Pranay, as a debt fund manager, within the macroeconomic pointers, what are the data points that you monitor to take that call on what you should be doing with the debt fund money?
We do a lot of rigorous analysis just to see what affects the yields here. So there are things which might happen globally which might not affect the yields there. So we try to screen out things. We get the input from the global team, the global macro team. We get the input from the inflation, the person who's handling the inflation, the person who's handling the growth piece, and then we get a idea whether we have to play duration, we have to play accrual, or we have to play liquidity strategy. Once we have zeroed on a strategy, then what we do is we try to optimize the way we can play the strategy. So that's how we do the optimization part.
For how long will we continue to see enhanced performance by bond funds? It's been a great year for both of you guys. You've given some phenomenal returns, but will you continue to do so? Will rates go down as much, and have the bond markets already not priced that in?
So it depends what rate scenario, the probabilistic scenario of the rate trajectory you have with respect to the markets.
So what is your call?
So look, our call is that we see RBI to cut rates further. We have been of this view last 24 months. We have been of the view that our Indian rates, nominally the rates have to come down because the real yield and the inflation is coming down. So we think that RBI will cut rates in this year, and probably they will cut rate even below 6% next year, depending on wherever the inflation and the global scenario is likely to be. I think this is the first time in last 6 months there are all kind of probabilistic scenarios which are opening up, and which gives a lot of room for a bond trader or for any guy who's playing on rates to play on those probabilistic scenario. Because as you asked, what's the difference between what market is priced in and what our estimate is? It all depends on probabilistic scenario that our model, our fundamental and technical research is throwing out, and what has been priced in the market.
Jayesh, do you think aviation is now, again, a 2 to 3 year story, at least minimum?
What is helping the aviation sector is a very high growth rate of passenger traffic. It's been running at 20% for the last probably around 15, 18 months. And we keep on debating within the investment team as to how long can this 20% growth last, but apparently it doesn't seem to be getting slow anytime soon. I guess the 3 leading listed airline companies offer a very good value in terms of medium-term growth and opportunity to for capital appreciation. My personal view is that airlines will do well for the next 1 to 2 years, but you have to watch oil. If we have oil at a range which is in the 50s and doesn't go beyond that, then airline companies definitely offer a good opportunity in terms of profitable growth for the next 2-3 years.
The other interesting sector that you talked about was also oil and gas. What makes you bullish, and which part of the oil and gas sector, considering it's a large umbrella in itself, is where you have exposure?
Yeah, so the area of oil and gas which we really like is refining and petrochemicals. Refining margins are clearly at multi-year high and expected to sustain with very high growth in demand for oil products because oil prices are down. So oil product demand is accelerating, and because of that, the refining margins are pretty strong for Indian companies. Incidentally, also petrochemical demand is picked up big time. So the petrochemical margins are also doing quite well.
Jayesh, I mean, would you steer clear of FMCG right now purely because of the spiritual competition that we have?
No, not at all. I think FMCG sector has been seeing some headwind because of slowdown in rural economy. But that sector, again, has a history of superior ROEs, superior business returns, and will continue to be a very defensive kind of sector. Look at the forecast. Let's look at next 12 months. If we have a good monsoon, if we have a pickup in rural economy, then on a low base, many of these companies will actually start showing double-digit volume growth. And these are businesses which have stood the test of time. They have remained stable, and we have continued to see growth in them for many, many years. So at this point of time, maybe they don't look as good as we would have liked them to do. But if the underlying economic fundamentals change, then they could become great investments with a 12-18 month view.
Great. On that positive note, we will wind it up. Thank you, gentlemen.
Up until now, we've really heard from global gurus, we've heard from fund managers, we've heard from analysts. Now it comes down to you and me. Now it comes down to distributors. Now it comes down to the real bloodline, the pulse of India, as we may call it. The man of the match, if you ask me, are you guys. It's because of distributors, it's because of advisors. The mutual fund industry is throbbing and thriving. And to really understand some interesting anecdotes of how India is investing, what are the scheme, funds, ideas, concerns, and conversation some distributors have with their clients when they approach them for financial advice. I think that's what we plan to discuss. So I'm going to start with the city which you represent, the city of Surat. What role are distributors playing in Surat? Because everybody there himself is a financial advisor.
Whenever anybody comes inside the office, first they will advise us. Then they will tell us that market is going to go down. It's going down, and Amit bhai, we should move out. What we should do? I had one very interesting encounter with one of my builder friends. So I wanted to meet him. I was in his office. There was long queue. All his customers were waiting to get their turn to book the offices in his building, shops in his building. And then also he met me. I explained to him all our investment schemes and funds, and he said in Gujarati, Amit, ketlu chhoot hai? What is the return you can get out of it? I said, if good funds, if you hold for a longer period, may give you a return of more than 15 to 18%. Acha, 18%. Amit, 18% mahine chhoot hai? Ke varshe chhoot hai? Obviously, sir, in a year you will get 15 to 18% return. This is the exact word he said. Mahine chhoot hai. Amit, tu tara paisa laine mari paase avi ja. Hun tane mahine 18% kaadi apis. Aaj aap બધા line માં બેઠા છે. But then also, before leaving, I said, okay, sir, you should have some asset allocation. Times can be good and times can be bad. And that is what happened, that in real estate, the downturn came. And when I met him next time again, he was actually barely seeking, he was aggressively seeking for some loan and funds and all that. And I also helped in arranging one small loan. Small for him, not for me. And after that, I said, okay, sir, now we should create some portfolio for you, which can offer you a liquidity, and which can, give money at whenever you want in your life. And he has started investing through me. So I feel that right strategy and right understanding of the necessity of a person, that is very important.
Lalit, tell us about the area you represent, Rachi, and what is the customer like? What are the queries you encounter? Share an interesting anecdote with us.
So रांची में क्या होता है कि थैंक्स टू मीडिया एंड जर्नलिज्म व्हाट हैज हैपेंड कि आजकल इन्वेस्टर्स लोग को भी वोलेटिलिटी ग्लोबल रिसेशन चाइना यूरोप और पिंक और ऑल आर फंड मैनेजर्स इन देमसेल्व्स इतना नॉलेज हो गया है एंड उसके बाद प्रॉब्लम क्या है दे हैव नॉट मेड रिटर्न सो दे कम एंड दे से कि बॉस एक्सेस ऑफ नॉलेज एंड इन्फॉर्मेशन वी हैव नॉट मेड रिटर्न सो विद ड्यू कोर्स ऑफ टाइम वी हैव रियलाइज्ड they fall on us and then understood a lot of good things कि आप देखेंगे changes in time. With 2008 में market में recession हुआ था, people were scared, volatility with redemption pressure were there. अब हम लोग वहाँ पे जाते हैं, समझाते हैं, they are really sticking, they are putting more money. That's a good change and a positive change which has come in the industry. कि लोग अब पैसा निकाल परेशान नहीं है. They have understood this volatility exactly what it means. Patience काफी बढ़ गया है. Thanks to a lot of support, AMCs and investor awareness programs and distributors, of course. They're understanding investment, they're understanding the risk with investments. कि risk, it comes with risk also. अभी तक था कि they were only chasing returns. So बहुत चीज़ें clear हो रही है. This is a good thing for industry as well कि छोटे-छोटे शहरों का allocation बढ़ रहा है. Remote areas से पैसा आना शुरू हुआ है. आस-पास जो areas कभी unexplored थे, छोटे-छोटे कस्बे, वहाँ से लोग छोटा-छोटा 1,500 रुपए का SIP शुरू किए. That is a good change which is happening. So,
I want to talk about IT. And in Bangalore, people understand global factors, they understand IT. And when it comes to IT, the distributor now has to face the challenge of what could be called as the new robo environment. Okay. So our clients walking up to you, are they saying that, Deepak, you're a nice friend, but you are an expensive guy. The robo guy is coming to us cheaper and he's unbiased.
Bangalore is an IT capital, and a lot of these softwares, etc., that are used for robo-advisors are developed over there. But you'll be very surprised. Over the years, I have not had a single client who comes and says that, give me my portfolio and I'm going over there. But in fact, year on year, I have cases where people start something online, they increase their portfolio a bit, grow it into a particular size, and then they realize that they can't do it. See, most of these clients don't have the time. They need somebody. They need a human face, especially when there is a crisis, there is a correction, there is a global crisis. They need somebody to talk to. And I think that's the time they realize the value of a distributor or an advisor. But that does not mean that technology will not catch up. It will. It all depends on how we are going to use it.
The message which I got when I went to Rajkot was that everybody understands stock markets. From the coolie to the shopkeeper, everybody wants to give you an advice. So how do you survive as a distributor in this kind of an environment, in a city like Rajkot?
People over a period of time have realized that this is not an easy market to be in. And most of the time when they go wrong, they want a human face to at least go and pour out that, okay, I've made this mistake, now what? I went with, say, 10 lakhs, I've lost 7 lakhs, 3 lakhs remains, now what? I think this is a serious profession to be in. And at that point of time, we really feel that, okay, the right things, if advised, wealth is generated. And in places like Rajkot, Hindi mein bolte hai ki der aaye, durust aaye, people eventually do turn up. And then it's the word of mouth that, okay, this is not our baby to, look after, may as well go in the hands of professional. And when you show them the actual returns and we show them our statements also, first of all, they always try to scrutinize the way every Gujarati does, that are the figures right or not right. But then after a conviction is built, they stop going to the retail market and they really trust you with their hard-earned money.
Let's talk about the challenge which a distributor faces. The challenge which a distributor faces is that how do you convince client when market conditions are bad? Because the client is, once you start losing money, or if your investment is not giving you a return, they will get wary. They will not have patience. They will get nervous. SIP sometimes on a 2-3 year basis, they don't end up making money if it's a bear market. How do you deal with general client anxiety?
From 2008 to 2010, 16, I think investors have matured. They have seen that markets do bounce back. These are the factors which do impact market temporarily, but this is not the time to pull out the money. So interestingly, in our investors, whenever the market goes down, we do get calls not for redemptions anymore, but they say, "Abhi kisme dalna hai? Which sector has impacted the most? So we should be putting our money into." So I think people have learned over a period of time that this is a market that you cannot time it, and time you spend in the market is more important.
Shyam, I want to understand the psyche of a investor, how that has changed in the last 3 or 4 years.
See, there has been continued skew in asset allocation of investors, at least in the markets that I have seen. And this skew has gone to extremes because people have too much of real estate and nothing else. And they are also seeing that you are not able to rent a house for 6 months, 8 months, and they don't have any liquidity, or all their income is going towards EMI. So basically, I think that the first reversal of people coming back to the stock market was started from this skew. People became more conscious because South Indians, they're more conscious of what they're doing wrong. They're always looking to see, am I doing something wrong? So I think that that's basically the genesis of the return of the person to the stock market and the return of the courage. The second thing is that over these 3-4 years, luckily for these people, when they have come back to the market, you have not had the kind of volatile environment related to market practices. There are no scams, there are nothing major that is disturbing them. And you are seeing a fairly sanitized environment. I think that has contributed greatly. And the amount of education and awareness that is being created all around. There's so many programs. From school level, you are having a finance quiz for children. So all these are being watched by various people. And I think on the psyche, it's working quite deeply. Whatever the industry has been doing over the last few years has been working on the psyche of the people. And they know they're doing something wrong. I think the combination of these two things has opened up a lot of minds towards investing in financial assets and in mutual funds specifically. If the industry is able to credibly provide products which give them their benchmark returns, which is probably low double digit, I think that the amount of money that can be gathered by the mutual fund industry is enormous. And I would think that the next 5 years will probably do to the industry what the last 20 did not. That is my perception.
Tell me about the investor in Patna.
Well, I still feel that the Patna market is left to be explored. We need to have a lot of discipline. I see a lot of people coming to us, our office, and saying that they have been investing for, say, past 10, 15 years and maybe not able to make that decent returns. Or maybe they don't even know that how much money do they have, how much returns have they made. So we do try to make an asset allocation for them, make a risk profiling. That's what I work on more, rather than choosing a better fund or rather than pitching them that and saying that, okay, I can choose a better fund for you. That's the secondary part. First, I need to make a risk profile, go ahead with their asset allocation, and try to see that how they balance it out in the coming future.
Ladies and gentlemen, wonderful to have you. Thank you for patiently just being with us.
Welcome back, everyone. No conversation around India's growth story is really complete without taking a closer look at the role government has played with respect to implementing changes in investment policy. And to shed more light on this, we're lucky to be joined by Mr. Shaurya Dawal, who's a member of the independent think tank, India Foundation.
Thank you to the organizers for having me over. What do really, if I think as an ordinary Indian, what do as an Indian I want? I want a strong India. I want a prosperous India where material improvement I can do for myself and my family. And I want a fair and just India. I want an India where just not I, but my other countrymen get something which is fair and just. And I think the current Prime Minister and his government is really working towards this vision of an India. So what are the ways by which this government is going to achieve these objectives? I look at, in terms of policy formulation in the last 2 years, and now sort of broad trends are starting to emerge, really 5 pillars of government policy. First pillar of this government policy looks that let us strengthen our fiscal architecture. That is, the fiscal position of the state must be such that it supports the robust, provides a robust impetus to the macroeconomic variables. Despite the various pressures that, since there was a weak investment environment and public spending must lead the way, the government moved from a 3.9% fiscal deficit and moving towards a 3.5. So I think that the reduction in the fiscal deficit and keep consolidating the fiscal position of the state will be one of the elements of the fiscal architecture. Second will be devolution of finances to the state. So what does the government do? It replaces, the first thing it replaces the planning commission. You say the center will not decide that, the center will allocate funds to the state. So there is no need for a planning commission. There is definitely a need for a Niti Aayog, which debates and discusses and tries to brief the government, but let the money go. And what does the government do? It walks its talk. It follows the recommendations of the 14th Finance Commission and devolves 42% of the earnings of the state to the state governments. Philosophically, what it does is that it provides more money and more empowerment at the state. So much of action, I think, in coming years will graduate away from Delhi and will become more relevant in state capitals and further down. One thing that is clear, that is at least that this government will not be a profligate government. It will not use the state money or the state exchequer to do what is populist. It will resist the pressure of populist measures, but it will spend that money in terms of trying to enhance and strengthen the inherent capacity of India and of Indians. The second pillar, I think, of this government, that this government has actually believed that, ultimately 60% of Indians still live in the rural areas, and therefore higher agricultural politics is both good economics and good politics. At the end of the day, you have to make the farmer and raise the level of agricultural productivity, make the farmer more empowered if you've got to create wealth in India, because that's where most Indians live. So what does it do? It comes in and gives a clearly defined target that we will raise farmer incomes by 2x in next 5 years. You improve the budget for the agriculture sector, not by 5-10% tweak. You double it from 23,000 crores to 44,000 crores. You increase money for things like animal husbandry, by about 30-40%. And then what you do, if the farmer is not strong enough yet, he's still dependent on the vagaries of nature. So we go for a major push in the crop insurance, so that at least that they are protected from the vagaries of nature till we build inherent capacities. And what do? At the same time, you increase the allocation of crop insurance, but you also go for quantum leap in development of irrigation things. You plan to bring 2.85 million hectares under the Pradhan Mantri Krishi Sanchar Yojana. You accelerate 89 projects under the Accelerated Irrigation Benefit Program, and you build another 8 million hectares into this. You 5x times increase the allocation for building irrigation capacities from 17,000 crores to 85,000 crores. That means if India's 58 million hectares of land is irrigated, you put for yourself a target of not increasing it by 1%, 2%, by 20% in the next 2 to 3 years. The third pillar of the policy, that somebody missed the boat while governing this country in the last 60, 70 years. When they believed that we, a population of 1.3 billion people, with 10 million people joining the workforce, could actually provide employment to all these people by just being a service economy? That we don't need to worry about manufacturing? That when other countries were creeping up, the South Asian countries, taking market share from us, we just let the manufacturing slip down to 16% of the GDP. For the first time, there is at least a target. Somebody has committed himself and said, I want to take this country from 16% to 20, make manufacturing 25% of the GDP. I want to create 100 million additional jobs. I want to create a 12 to 14% increase in manufacturing every year. So for the first time, at least, we have a vision where we want to go. And the government is trying. Obviously, there are problems. We have problems in infrastructure. We have problems in labor laws. We have problems in, and the critics will argue whether this is difficult. But the fact of the matter is, you've got for the first time, I was reading some $42 billion of FDI. When most Indians are cynical, at least, and the whole world is falling apart, there are people who believe that, India can actually do manufacturing. People are actually starting to put up manufacturing facilities. And, just wait and watch. Just wait and watch another 6-9 months till it reaches an inflection point, when you will actually start to see this manufacturing engine start to crank up. And once it starts to crank up, you will start to see how manufacturing can actually radically change the lives of Indians, can actually allow people that we probably have never seen in our lifetime, that people move up and give jobs in a big way. The fourth point, I think, is about empowering the Indians, is about providing employment, employing India. And everything that we've heard that has come out in the last 2 years from this government, whether it is about skill development, that is meant 40 crore people will be skilled by 2022. With that, we will do Startup India, we will do Digital India, we will do Ease of Doing Business India, we will increase the business environment, we'll rationalize procedures and policies. All of this is about ultimately empowering the common Indian. India will only be strong when Indians will be strong. And that, is something that, comes to my fifth and the most important pillar, in my view at least, of this government, was the idea of the personal economy. That is, for the first time, that you have to make people, you have to bring the person, the individual, into the economy. Look at the financial inclusion program. In 2014, when this government was sworn in, out of 25 crores and people in this country, after 65 years of independence, 14 crore people had bank accounts. One man stood up and said, I am going to give them bank accounts. 2 years later, 21.5 crore people, households, out of 25 crore households have a bank account. And government has been able to mop up 35,000 crore rupees from these bank accounts. So this bank accounts was not just giving people a luxury. There was a plan to it. The plan was to ultimately empower the people. Same thing with the Mudra loan scheme, to be able to give people empowerment, to be able to generate jobs, to be able to take easy loans. Ultimately, to be able to bring the financial instruments, and some of this may be relevant, insurance, medical insurance, health insurance, life insurance, one after the other policies that will make an Indian stronger and a government of India weaker. And in that, when India becomes stronger, the Indians become stronger, and the government of India becomes weaker, in that will lie the true strength and the future of India. So obviously, I'm not saying that this government is going to solve all the problems and, the key risks are gone away. The fact of the matter is that, many, many challenges continue to remain. This is a very big country. It takes a lot of time to change. But if you sit back and look at the 2 years that this government has done, I think by and large, they have sort of touched on the right points. At least their direction is right. They made some progress, and hopefully if they continue to steer the course, I think we're looking forward to a much more empowered and prosperous India. So with that, I'd like to bring my talk to an end.
History shows that favorable investment environments are often fueled by growth in government spending and a conscious decision to invest in infrastructure development. So naturally, at the Birla Sun Life Mutual Fund presents Voyage Navigate 2016, we thought it'd be very fitting to have the Indian Railway Minister, Suresh Prabhu, grace the event. Unfortunately, he had a prior commitment in France, and he was unable to join us, but he did have a special message to share with all of you. So ladies and gentlemen, if I could request the AVB plate, please have a look.
I'm very sorry I've not been able to join you in person, but I've taken this opportunity to at least be there with you through this medium. As you know, we are all looking forward to India playing a very key, important role into the growth of global economy and also grow faster so that we address several of the challenges that we face in the country. As we know, we have been facing some acute challenges which were really legacy issues. We had to inherit them and we have decided to address them. And thanks to the leadership of our Honorable Prime Minister, we have been able to untangle many of these past challenges without making it a very high profile issue. We worked on it in a way that those issues get handled, get tackled, the situation gets better, but not making too much of noise about it. We're also trying to work on how to take India into the next growth trajectory. To do that, we must change the GDP profile of the country. We must bring in more contribution from manufacturing to the growth of GDP. And therefore, our Prime Minister launched a Make in India project. Railways issued the biggest tender ever, 40,000 crores to GE and Alstom. Both the projects are now started their construction work. They are going ahead with that project immediately. Alstom is going to make electric locomotives, diesel will be made by GE, and this will create a huge ecosystem for manufacturing of so many components, so many things which will go into manufacturing at the shop floor in these two plants. So just imagine the huge spin-off benefit of these two large projects which will come up in Bihar to create an ecosystem of small and medium enterprises. The technology transfer not only in these two, locomotive manufacturing which will be state of art, best environment friendly, least cost, anytime, anywhere in the world, but also create an ecosystem which will create jobs, create SMEs, and some of you who look at taking early equities in some of these companies will provide an opportunity for you too. So this is a Make in India which we are trying to do. We are also working in the railways to make the first ever high-speed railway project in the country. Mumbai to Ahmedabad, two most commercial important centers of the country, for which the Japanese collaboration is coming. We don't have the technology, but this 1 lakh crore project, most of it will be funded by Japanese at 50 years tenure, 15 years no repayment, at 0.1% interest, 0.1% interest. And this particular project also is going to be made in India. 85% of that will be made in India. So what is the benefit? Another ecosystem will get developed. What I'm saying is, Make in India is something which everybody is doing, we are doing. We are also going in for a major two project for Make in India. We are already working on dedicated freight corridor, 85,000 crore project. Most of this is being made in India. We have been able to, because of this, we have got a best of new track laying machines. One day, I wish you could go and see it. This particular will be changing the complete paradigm shift in the country. The Prime Minister has the concept of digital India. As you know, if we do not become digitally active, we do not become digitally engaged, we'll probably not be in business. So many top companies of the world, if they are not digital proof, digitally complying with, they will not be doing business. So just imagine the advantage we have. If we start doing digital India campaign, try to reach to the village, the governance will improve, corruption will go down, service delivery will be efficient, and that's what we are trying to do in railways. So we are trying to change the economic profile. In the railways, we are trying to do that. This year, we have spent the highest ever money in the railways history for capital expenditure. This is not only the highest ever, this is more than double of the previous 5 years average. So this is what we have spent. In addition to this, as I said, not just budget, this capital expenditure was only budgeted for. Outside of the budget, we have spent even more. So just imagine the combined benefit of this to the economy. Every rupee spent in railways has at a factor of 5 times more benefit will accrue to the economy as a whole. So this is what will happen, which started already happening. In the next year, we'll spend even more and also have joint venture with the state governments, which in turn for the first time will have a separate company. I already asked the SBI Cap to actually create a business plan for them. The World Bank, the Asian Development Bank are willing to finance that project. I open to any other private banking system, anybody else, they want to come and participate, they are most welcome. So this will create another opportunity avenue of development of the railways. I know the railways will contribute significantly. We have many things, customer service has improved, but we want to improve it more. We want to increase the speed of all average trains, and 2020, I'm sure, as I said in my budget speech, we'll be able to increase it substantially. We'll be bringing new technology. 13 countries we already have a tie-up. I'm trying to take it to the new level. Each of the countries, just imagine, they try to take one particular aspect of it, try to focus on that and try to revamp it. And all these countries' technology then will come to India. Over a period of time, we'll be use that same technology for modernizing not just that part of network that they are doing, but entire network of the country. So just imagine the benefit that will accrue to us. So we are working on each and every aspect of this in a most efficient way. I am very sure the railways will be the change agent that we all expect it from. Long way to go. I am not saying it has transformed already, but I am definitely saying it is changing for sure. What we need with you is an engagement as fellow passengers, fellow travelers. Somebody, we have to work on the journey together. What is the journey? The destination is to make India better. But to make India better, you cannot do it unless each and every sector becomes better. Railway is a very important sector to be ignored, and it can contribute, as the Nomura report said recently, is more than 1% to GDP. We need to channelize the household savings into the productive investments. The best medium is a mutual fund. So mutual fund is mutually beneficial. It benefits the economy, it benefits the individual, and obviously to make economy and individual benefit, we need intermediaries like the one that you are all sitting here. So I acknowledge the role of the intermediaries. I acknowledge the role of the financial institution, particularly when I am an ex-banker. So I'm sure you will guide me because I am now old, but you will have new ideas. So we'll work together as a team to make India better.
And next up, we have the Executive Director of the Railway Ministry, Ms. Namita Mehrotra, who will share a few words on the future of Indian railways from both a short-term and a long-term perspective. Please join me in welcoming on stage Ms. Namita Mehrotra.
I understand it's a tough task to speak after the Minister. His thoughts are always very engaging. Nevertheless, I'll make a short presentation and just take you through specifically what all we are doing, what all we have done in the last 1 year, and what we plan to do. Last year we had identified that underinvestment in the railways was the reason for our not progressing sufficiently. So we had prioritized our projects and raised money from the market to invest in our projects. So investment in infrastructure was the first pillar that we took up. Second was improving the quality of life for the customers. So emphasis on customer satisfaction was the second pillar of our strategy. This year we introduced 3 more. One was cost optimization. Second was structural reforms. We decided to embark on structural reforms. And third was, of course, generating more revenues. So, so far as the stations are concerned, the immediate activity that has been taken up is that our stations are undergoing a major beautification apart from the cleanliness drive. We've developed a number of apps for the benefit of the customers. Automatic ticket vending machines have been introduced, and the latest is that we are introducing handheld terminals for sale of tickets. So one doesn't have to stand in queues to purchase tickets, the way the credit cards are operated, so similar machines would be available and tickets could be purchased anywhere freely, maybe on the concourse of the station or maybe even outside the station premises through these machines. A major development that has taken place over the year, and that has been through the initiative of the minister, is using the social media to understand the concerns of the passengers, so much so that this has become a medium of assistance, providing assistance to the customers. Tweets are monitored continuously on a real-time basis. They are manned 24 hours and help is immediately provided. So the entire system of divisions, zones, they're all geared up to attending to these requirements immediately. We are looking at much more smarter coaches in the future, which would be more ergonomically designed. They would have, water level indicators. They would have televisions installed, LED screens, etc. So all these are in the making, and soon we would have much better quality coaches with much better riding comfort. A major thrust area of the current budget has been the increase in speed, that is mobility, emphasis on mobility. So towards that end, we are creating a mobility directorate. We've already created one, and higher speed trains have been announced in this budget. Then exploiting non-fare revenues, that is non-tariff revenues. We are exploiting our advertising potential. As of now, there has not been a consolidated policy for advertising, but now for the railways as a whole, it is expected that in the current year, the advertising revenues would go up by 4 times. So, and in the near future, maybe in 2 years from now, we should be earning about 10,000 crore or so from advertising. Station redevelopment is one major area where investments are expected to come up from the private sector. So we are going to see a major surge of private investment coming into the redevelopment of stations, more on the lines of the way the airport development was done, so that there are better facilities for passengers, better amenities that are available, and we are also able to provide world-class standard stations to the country. In the next year, we expect that about 2,800 kilometers of lines will be commissioned. In the previous year, we did about 2,500. Similarly, for electrification, we expect to commission about 10,000 kilometers from 2015 to 2019. So that is all that is happening in the railways right now. Thank you.
An event of this scale really does not come together without the support of an entire ecosystem. And to deliver a special vote of thanks, can I please have on stage Co-Head of Retail Sales and Distribution, Mr. Siddharth Damani.
A very good evening to all our dear partners who have come from all across the country. Voyage, 3rd year in running, and it just gets grander and bigger every year. When we conceptualized this 3 years back, it was with a single motive that can we, at Birla Sun Life Mutual Fund, be the knowledge partner of all our advisors. And I think this has been our effort, and I'm not saying we have perfected it, but the only thing I can say that as years go by, it just, the conviction and the dedication and the motivation just goes on and on. Why? Because we are in this business because of you. It's a great beginning for this financial year as we have been doing for the last 3 years. Thank you very much.